Right, another month, another bunch of real estate market records. Very pleased to be joined by Zan Jahinki, CEO of Property Monitor and Director of Market Intelligence and Research at Cavendish Maxwell. Zan, it's lovely to see you.
Lovely to see you as well. Morning.
Right, we've got the usual bunch of records. Let's drill it down into two that actually take us away from price for a moment.
Let's
Spoiler. Price appreciation continued in October. We've got an all-time transaction record. Where does that position us for 2024 as a whole?
Oh, way ahead of anything we've ever seen before. So it's another all-time transaction record. For anyone listening that has heard that before, it's because every month except April, we have had an all-time transaction record. Keep going up for that month. So not only the strongest October ever, it's the strongest month ever. First time ever over 20,000 transactions. So up to the end of October, we've already surpassed the total number of transactions we did last year. We're on track to set another annual all-time record, probably pushing upwards to 160, 170,000 transactions. These are phenomenally high numbers. When you consider back pre-COVID, we're probably looking at 30, 40, 50,000 in those earlier years coming up, and then all of a sudden jumping over 100,000 and now well over that. So the market it's moving in all aspects, but being heavily driven by off-plan. That split between completed and off-plan sales just keeps growing. It's about 73% of what we're seeing in the market, off-plan sales.
And what's the rate of off-plan that we're seeing? How many are we seeing a day at the moment? I know that's your mathematics specialty.
How many a day are we seeing? Well, we're seeing a launch day. A launch every 19 hours. It's pretty much been around that for the last 6 months. Launches, we've got a huge amount of new developers entering the market as well. We're seeing about 350 units per day come to market from these launches. All right, so we're about 114,000 new residential units bought to sale in the off-plan market this year. That's another all-time record. Add to that, we're probably going to see, we're still crunching the October numbers. It's probably a record month in October for launches, well over 15,000. We might even be pushing 17, 18,000. That's going to end the year at probably 135, 140,000 new units that have been bought to market for sale, which are going to hand over in the next 2, 3, 4 years. Start probably thinking about some delays here that are going to come into the market given the sheer volume of projects we've seen and the fact that developers launch them, someone's got to build them. Right, so we're going to see some contractors. You've gone through a renovation recently and there's pressure on that side. Imagine that now in the mass market for developers, having general contractors, subcontractors to build all these projects.
They're not just deciding about a kitchen bench top, are they?
No, they aren't. They've got a few more decisions to make. But you're going to see so much in there. The construction industry is going to see a huge boom and growth to carry these projects forward to completion.
How much longer can we continue at that rate of off-plan launches?
Crystal ball question. Thanks, Brandy. Look, they're launching and they're selling, which for me, I mean, some people get scared. A launch every day, every 19 hours. It's nothing to be scared of when they're selling, right? And right now they're being absorbed. Your marquee developers, your EMA and those, they conduct a launch and they're selling out within the first, 90% of it within the first 30 days, the majority of it within a 3-month period. Really good absorption rate. Small developers, newer ones to the market, they're taking a little bit longer. Maybe they're offering more incentives, but they're reaching high absorption rates relatively quickly, say 6 to 9 months. When we see that slow down, when, say, a marquee developer that takes 6 months to get to that number, that's a start to slow down. There's less buyers in the market that are pulling that up. So there's 2 rates to look at. There's that selling off plan, are they being purchased? And then it's when they materialize and hand over them being occupied. So we don't know what the market's going to look like in 3, 4 years when we see the big masses of these come on. Population growth is steady, it's strong, but we're going to come into a point where supply and demand, there will be an imbalance. It will tip the market. It will have some downwards pressure on pricing.
Okay. I've got 3 minutes left with you and another record as well. This time for mortgages. Talk me through it.
Yeah, this one's probably the most interesting thing to look at. So, not to be outdone by sales, mortgages have had their strongest month ever. About 4,300 transactions on the mortgage side. We break those down and we look at how many of those are bulk, how many are refinance, how many remortgage, and then how many are initial purchase money mortgages. Interesting thing is we look at those new purchase money mortgages, so a mortgage taken out for a property purchase in the same month, and then we look at the total amount of properties that sold that month that could be mortgageable. So let's take out the off-plan because you can't get a mortgage on that unless there's very few instances. That rate has gone up to one of the highest numbers we've ever seen. It's sort of in the mid-30% range. Compare that to somewhere like Australia. Australia's about 38, 39, 40% of the same thing. The US, much higher, about 60%. we've gone from being in the teens 5 years ago of properties being purchased, completed with mortgages, to more than double that. So these are really good signs. And this is the whole time we've had record high interest rates or record growth in interest rates. So now with rates dropping, we're going to see probably even more mortgages come out, affordability come in there a little bit more, some downwards pressure on pricing. We're likely to see that home ownership rate go up further.
That's my question, because the reason we've been so low is we've had, other than the off-plan rising, is we've just had a lot of cash buyers, a lot of investors. What does it tell us about who's buying?
So for Dubai to be long-term, right, we want to see more people move here, buy property, live here, make it a home. We also want the investors coming in. So those numbers point to more end users coming into the market. And we're seeing this in the data. We're also seeing it anecdotally from brokers and developers. Those buying are buying for end use, both in off-plan and in the completed market. So when some of these projects start to hand over and a mortgageable product, that rate of mortgage penetration is probably going to go even higher. So for Dubai, great thing, long-term growth, interest rates coming down, banks are going to love it, their books are going to go up, more loans will be issued, net positive in those regards.
Right, 30 seconds left with you. December, what do we normally see?
So we normally see over the tail end of the year a bit of a slowdown because people are away. It's built around that seasonality there. That 20,000 record we saw last month, I don't expect that to be repeated in the coming months. I think we'll see it come down a little bit. We'll be in the teens again, which is still all-time highs. A little bit of a lull over Christmas and the New Year's period. Coming into Q1, expect much of the same. Hate to say it's going to be rinse and repeat. I hopefully have some new things to say and not just another record month. But yeah, strong end to the year and a good start to next year.
Zan Jahinki, a man, by the way, not selling property, just counting it. And COO of Property Monitor and Director of Market Intelligence and Research at Cavendish Maxwell. Thank you for your time.
Thanks a lot.